Good day, viewers. My name is Tavonga, and welcome to yet another episode of Analyst Insights, your plug for anything business, finance, and investment. Today, we are joined by our usual guests, Rufaro and Ranga. Welcome, gentlemen.
Thanks, Tavonga.
Thank you for having us.
Yes, so let's get into it. Today, we're going to look at a number of issues that have happened on the market. One standing out, which is the resumption of Sidco trading on the ZSE. So, Ranga, can you give us a brief comment as to what has happened?
Thanks, Tavonga. So I think this is just a reversal of a transaction that was taking place where Sidco International was taking over Sidco Zimbabwe Limited. Sidco International is already listed on the Victoria Falls Exchange. Yes. So obviously it made sense for them to consolidate what looks like to be one of their biggest, if not the biggest, subsidiary into the group, so that to give it some critical mass and to be able to present something with value to the investors. So from the company's side, it made sense for them to bring it on board. But obviously the authorities, exchange control and other authorities felt that the transaction was amounting to taking away a prized asset from Zimbabwe into the ownership of a foreign company, which is what Sidco International is at the moment. So what does it mean for the market, and maybe as local investors, how should we respond? Well, it depends. I think when the transaction was being done, in fact, there was a lot of opposition from significant opposition from some market players who were not happy with the idea, and also maybe the conversion ratios that were being used for the simple reasons that Sidco International, which was already listed on the Victoria Falls Exchange, was not attracting much attention, and also the liquidity on that market and participation is very low. Yet Sidco Zimbabwe Sidco Zimbabwe Limited rather on the ZSE was actually one of the most popular with local institutions. And when you just look at the whole issue of SID and how staples like maize is actually a staple, and this turns out to be also the main product for Sidco Zimbabwe Limited. It's actually an area that ordinarily is expected to raise some emotions. I think the local market would actually welcome the reversal of that decision, because now it means an additional companies back on the Zimbabwe Stock Exchange. Much as the VIX is also available for the local players, but it requires currency, that foreign currency, and right now there are not too many local players that may have the capacity to be participating on that market. So that this actually comes as an additional, if you would want to put it cynically, listing, because it's a listing that we had lost. I don't know what it means in terms of the policy framework or the signals that we are giving to people who are looking into Zim from outside, in terms of whether there's consistency in the policy, or maybe whether this is going to be interpreted as maybe another infringement of private property rights, because it was within the shareholders' rights and the promoters of the project to do their corporate transaction and consolidate it the way they want. Maybe that could be a concern, but in terms of having Sidco back on Zimbabwe Stock Exchange, I think it's a good problem to have, as far as I'm concerned.
It's a good problem. Rufaro, you can add your view.
Look, I think that for the market, definitely the ZSE is going to be richer. Sidco used to trade decent volumes and was broadly held by the local capital market players, so I think they will welcome this. A lot of them were unable to trade Sidco on the Victoria Falls Stock Exchange simply because of the currency that that exchange is denominated in, which is not available to most of them. So I think they'll look at it as a bonus or as a plus, and they will welcome the return or rather addition of another counter to the ZSE. The question of is this a strategic asset, and whether it should be available for sale to foreigners. I think that debate will rage on forever. But if we look at the global stage, even the most liberal free market economies in the world, they have sectors or industries that are not open to foreign investors. So, for example, if you look at the US, foreigners are not allowed to own more than 25% of US airlines because they view that sector as of strategic importance. So I think every nation has the right to have a view in terms of what which of its assets are of strategic importance and to what extent foreigners can participate. I think from a Zimbabwean perspective, my view would be that we are better off erring on being more open and liberal because we, unlike other developed countries, desperately need foreign investment, and we should be signaling to the international investment community that we are genuinely open for business. And if there were concerns around what a new foreign shareholder might do if they took over Citco Zimbabwe, I think those concerns could have been addressed in the transaction to say, look, we want you to maintain a certain presence in this country. We want certain seed intellectual property to always be registered or reside in a Zimbabwean domiciled entity. I think all of those things could have been addressed while allowing a foreign business to become the controlling shareholder and signal to the rest of the world that foreign investors are welcome, and to the extent that there might be challenges with certain investment opportunities, the government is willing to accommodate the foreign investor and make compromises that will allow transactions. So I think given where we are now, where we've over the last 18 months we've seen declining foreign direct investment, I think it's probably not the best approach to be restricting investments from foreigners in this way, although it is government's prerogative, but I think that perhaps they could have exercised it differently.
So just for clarity, the reversal of this transaction, it means that Citco International remains on the VFX.
On the VFX, yes.
Yes.
So Citco International remains listed on the Victoria Falls Stock Exchange, but and the transaction wasn't reversed. The transaction on the table was Citco International was going to buy 100% of Citco Zimbabwe. And that transaction required exchange control approval, which didn't happen. Mm. So that transaction is not going forward, and as a consequence of that, the Zimbabwe business is going to now be listed separately on the Zimbabwe Stock Exchange.
Okay. So in another development, the Insurance and Pensions Commission says it is developing a prescribed assets framework in order to hedge institutional investors against inflationary pressures. So maybe can you comment on to that?
Thanks, Tawonga. So maybe just a brief background. So there are institutions like pension funds and insurance companies that are expected as part of their investment holding to hold certain prescribed assets. Usually these are like government securities, whether they are treasury bills or some other form of securities as part of their investment, for the simple reasons that the investing and saving structures in the country must be seen to be supporting project of a development, national developmental nature. So that's the basis of the prescribed assets. But obviously over the years, because of the kind of instruments or securities that are there, which were maybe limited to the likes of treasury bills, in hyperinflationary environment, the tendency or a lot of value was actually being lost by investing in those, because they are predominantly fixed income instruments, and they are not able to move in line with the inflation. So it's progressive to the extent that IPEC is actually acknowledging that there is need to have some instruments that are providing a hedging mechanism. I think we have also seen, besides that, IPEC actually inviting players to create products or to create securities that are able to meet PA status, but also providing good returns. So because I mean this whole issue of inflation and a depreciation of our currency is likely to be with us for quite some time. But maybe one would say, are we not better off having this whole issue of prescribed assets being scrapped? But I think where we are as a country, maybe it may not be possible. I don't see that happening because government will still need to get to be supported to have access to cheaper money, if I could put it that way. Otherwise, without that, without institutions being compelled, and if institutions are only going to be using investment decisions to allocate their capital, it's very unlikely that they'll allocate capital to instruments such as treasury bills for obvious reasons, that the returns tend to be sub-inflationary. So that element of prescribed asset status is likely to be there. It's good that they are accommodating room for innovating into areas that meets PA, but also being able to assure investors of a decent return.
Okay, thank you. But yeah, under 1 minute, can you tell us if it is efficient?
Look, I tend to disagree with Ranga on this one. I think that, so when you look at the pension fund community, yes, and the money that's being invested, this is money that individuals have earned, have paid tax against, and is being set aside for them to be invested, to be available to them when they retire. So really, they should be free to, the managers of that money should be free to seek the highest possible return in the market. And the current prescribed asset framework, where these assets tend to be treasury bills and other government paper that has negative real return, what that works out to be effectively is an additional tax on retirement savings. So this is why, for example, you'll find that somebody could have worked for 40 years in the civil service, retires today, maybe during that 40-year tenure, they were earning effectively $400 a month. But because the pension has been eroded by this prescribed asset allocation, they are getting less than $50 a month in their retirement. Most of the value in their pension contributions has been decimated by these prescribed asset allocations. So I think that this is a positive step, but we have a long way to go. I think the system should be much more liberal. I think pension fund administrators and managers should have the right to seek the highest return. If you look at our neighbor South Africa, where they also have very strict exchange control, the pension fund industry over there is allowed to invest up to 30% of the portfolio outside South Africa, and an additional 10% in Africa. So they have a lot of freedom to seek the best returns anywhere in the world, and they don't have this problem of prescribed assets where they have to buy paper which gives them a return that doesn't make sense. So I think the prescribed asset framework in this country needs a lot of reform, and this is a positive small step, but in the bigger scheme of things, it's really a drop in the ocean. We need to reform the system much more than we have.
Okay, thank you. We are now going to take a break. Please stay tuned for the next segment. Thank you for staying tuned. Moving on to the next question directed to Rufaro. Chloride Zimbabwe is reportedly drafting lithium battery production technology into its operations to prepare the firm for the future without petroleum-powered cars. So what are your views on this in line with global trends?
Okay, so I think before we speak to what's happening in the electric vehicle space, I think it's relevant just to mention that Chloride here in Zimbabwe is in the business of selling batteries to help people manage their electricity at home. So either to charge batteries when there's power, so that when there are power cuts, they can access electricity via their battery. And if they have a solar installation, and they want to go off grid, then the battery will assist them in powering their homes or businesses at night when the sun doesn't shine and you can't generate solar power. So I think this is an exciting space in its own right, and Chloride has done well and is growing aggressively in this space. So I think for the next few years, this will probably be the basis of their growth. But obviously, what's happening globally is relevant to Zimbabwe. I think there is also a transition to electric vehicles which use batteries, and I think they're being forward-looking, and it's the smart play to also be applying their minds to how they can participate in that. All the major auto manufacturers, globally have announced that they are going to transition to electric vehicles from internal combustion engine vehicles, over the next 10 years. So I think this is it's a $1 trillion market globally, and for Chloride to be forward-looking and thinking about how they can participate in that makes a lot of sense and is commendable.
Ranga, do you have anything to add, or we can just probably get brief comments as to the developments that have happened on the market in the last week?
I think my only comment to that is it's important. We are part of a global community, so whatever developments are happening in other markets, we should anticipate them.
Yes.
So we don't need to tell ourselves that maybe it's going to take a lot more years before such developments catch up with us. Just look at something like telecommunication, where because of fixed, in the era of fixed telephone, the penetrations were much lower, and everyone was pretty much on a waiting list if you wanted to get a line from Tower or PTC then. And how that has actually shifted dramatically with the coming in of mobile telephony. So it just tells you that actually technological developments have got a tendency to actually come earlier than you anticipated, and so it makes sense. And maybe the other way of looking at it is say, okay, as these new developments are coming, what can we do? Are there any other areas that we can also that can participate? For example, we are a commodity-rich country. So to what extent are some of the commodities or the mineral resources that we have important in terms of being able to meet some of these needs? For example, lead, so the issue of the lead batteries. So it goes beyond maybe just chloride, but also even in terms of our exploration and in terms of how our resource is going to be developed. We have to be anticipating these changes globally and place ourselves accordingly. Maybe coming to the issue of the developments on the market, I think maybe just for information purposes, just say it's been a year since the auction system was introduced, and I guess all of us can ponder about the successes and failures, the misses and hits, whether it has been able to achieve what it was set out to do, and whether if there are people who were to sit in some boardroom and review and be able to make a decision as to do we go ahead with it, or maybe if it's a monumental failure, are we going to tweak it or altogether get rid of it. I think it's important, especially after such a milestone in terms of having spent a year. But I think it's a debate for another day in terms of whether the auction system has been successful or not, but just for noting that it's been a year of this thing being with us.
Rufaro, your concluding remarks?
Yeah, okay. I think the other thing the other development on the market over the last week is the Reserve Bank basically set a floor interest rate for savers. So if you've got a savings account, for example, as an individual, the bank is obliged to give you at least 5% interest on that. The prescribed minimum interest rates, they are all significantly below inflation. So I don't really think they're going to move the needle for savers. I don't think anybody is going to be incentivized to save in Zim dollars if they're going to make savings elsewhere. And my inclination is that free markets work, and really, the regulator, in my view, should not be seen to be prescribing prices, whether to the market. And so in banking, an interest rate is that's we're selling money, and the price is really the interest rate. And I think that we are better off in a market where we have a transparent price discovery process, where the market participants, through supply and demand, set the price, and the regulator intervenes if there's collusion or bad behavior by market participants. But for the most part, I believe that we are much better off if the market is setting the price.
Thank you, Rufaro and Ranga, for taking time from your busy schedules to come and share with us your views. And to our viewers, thank you for staying tuned. Please send your views and comments on our Facebook page and YouTube channel using the details displayed on the screen. See you next time.